Folks, today I'm going to talk about top pharmaceutical stocks trading outside of the business cycle, and that's very, very important right now. Now, during the last few months, the markets experienced massive volatility, selling pressure, accumulation, all of the above. Matter of fact, we've seen more trading action in the past month than we've seen in the last 20 years. It's right. The COVID-19 selling pressure caused numerous sectors to come undone, only to see unforeseen upside as most investors expected a crash. Go figure. While the market as a whole is recovering and trading above the 200-day moving average, if you look closer, there's several clues telling me that the foundation is not as solid. Increased volatility may be here to stay. Sectors are fragmented. The number of stocks trading above the 50-day line is near historic highs. Put-to-call ratio is stretched, and implied volatility on option premium appears to be expecting another nasty turn to the downside. That's right. Look, it is what it is. When you combine all of this with the simple fact that there's no vaccine for the COVID-19 right now, there's a strong chance that the second shoe hasn't yet dropped. I've said it, okay? Now, this is why now more than ever, you've got to be extra careful and look for stocks that are resilient in the current economic uncertainties. And this is why I'm increasingly becoming focused on pharma stocks and will be following them closely over the next 2 quarters. Smaller pharmaceutical companies typically don't follow the usual business cycle. They get majority of their funding from deep pocket, Fed grants, and partnerships with larger pharmaceutical companies. Moreover, small pharma stocks have consistent demand without the big spikes or unforeseen periods seen by other industries. These companies essentially run with greater consistency since the public needs medication at all times. I'm also anticipating the Fed offering increased support for the pharma sector, and substantial portion of that $2.2 trillion coming into the market will make its way into research development to avoid another COVID-19 pandemic in the foreseeable future. Now, I looked at correlation of smaller pharma stocks with the overall market, and the correlation is less than 0.66, which tells me these stocks have a mind of its own, which means that adding them to your existing portfolio should lower volatility, decrease risk, and overall give you a smoother equity curve. Now, before I get into specifics, I want to be careful to select companies that are not dependent on COVID-19 and should do well regardless if the vaccine comes out before the year end or not. So let's get into it. The first stock on my list is Dr. Reddy's Laboratories Limited. Ticker symbol is RDY. This is an Indian-based company. They're only now starting to make headways into the US market. Their business model, it's dead simple. It's a leader in generic drug market. The company supplies both over-the-counter and prescription meds and is now getting into cancer treatment, which is huge. The company vertically integrates across the value chain and is expected to show strong growth, especially in light of increased needs for medication around the world, in light of everybody getting sick from God only knows what now. The company has a 1-year growth of 43% and revenue growth of 10%, from $552 million to $588 million. And share prices are seeing the highest upside gain since 2015. And I don't think that's a coincidence. Expect the overall sector to continue heating up and the generic market around the world to continue not only exploding, but maintaining very little correlation with the overall stock market. The next stock on my list is Zoetis. I don't know if I'm even pronouncing it correct. It may be Zetis. Ticker symbol is ZTS. The company focuses on pharma for animals, which is a huge economic and social factor. Let me give you a good example. Last year, Africa had the swine fever, which destroyed pigs across Africa and China. Over 55% of the herd had to be destroyed. Pork, it's extremely popular in China, and it's my favorite meat too, by the way. Now, prices skyrocketed. China had to begin importing meat. Imagine if this swine flu impacted the US. Can you imagine what it would do to the price of pork? Oh, I can't even handle it. ZTS is working on a vaccine to the African swine flu. for the African swine flu and others, because these infections can wipe out animals in some of the largest countries and cause billions of dollars of loss, in addition to having to destroy millions of animals. This is why the company is very important to economic growth and animal health, and is in a niche that's not correlated to the typical business cycle. The company has seen strong growth, giving us 3-year return of 121%. We've seen 4 quarters of positive earnings surprises and 8 strong buy recommendations. The stock has near-term high price target of $160 per share, and I'm expecting increased resilience in light of the increased attention and focus on healthcare and its impact on economic growth, and that's very important. All in all, I believe these 2 stocks offer strong upside opportunity with decreased correlation to the overall market, especially in light of the drama that we're seeing with the trade war coming out of the COVID-19 trading cycle. I believe these stocks will be the ones to watch over the next 2 to 3 quarters. Hope that helps. Folks, one of the easiest ways to gain an edge in the market is by using a reliable, predictable system. That's right. And when it comes to timing trades, my on-the-clock system, it's second to none. The goal of the strategy is to enter trades right before Wall Street pours millions of dollars into a stock, causing them to jump higher. Historically, when a stock goes on the clock, they immediately move higher. All you've got to do is wait for the timer to reach zero, place the trade, and cash out like that 14 days later with a $3,450 payday. If you want the names of the 3 stocks it says could go parabolically soon, click the link on the button below. Get in on it now.